The stock market has raced to new highs recently with better than anticipated inflation numbers that came out this week. Not to mention, we also heard from the Federal Reserve, and overall, the stock market is just screaming higher. And in this video, we're going to be doing a little bit of a deep dive into indices and talking about the reaction across the board to this Fed meeting as well as these inflationary numbers. First, let's have a look at those numbers themselves. So on Wednesday, we had the core CPI and CPI prints, which came in lighter than expected. Now this red don't get it twisted. The red here is actually a positive thing because the slowdown in inflation, which has been above trend, this high period of inflation that we've seen, a move lower in inflation is actually very welcomed by the indices because slowing in inflation means that the Fed may then look to cut rates. Now, this morning, we also had the producer price index, which matched the, idea or energy of the CPI yesterday, which was cooling down in the statistics here for inflation, both on the producer level or the wholesale prices, as well as the consumer level, the consumer price index. This is great news for the indices, and it makes a lot of sense why the indices rallied higher, because this idea, again, leads to progress in the Fed's mandate of trying to get inflation under control. Now, yesterday, we also had the FOMC statement and press conference with Jerome Powell, and what we saw there is, again, more, cheering the success of the progress that has been made. Jerome Powell made a quick mention that essentially the idea of making substantial progress in both mandates, which their two mandates are, number one, getting inflation down to that 2% target. They're in the right direction in their view. And number two, keeping jobs relatively stable. So they've cheered that, but at the same time, there was a little bit of a dash of, wondering whether or not policy is sufficiently restrictive enough in order to get inflation to continue moving in the right direction. That being said, looking at the charts, we can see the reaction from the market was a very positive one overall. Taking a look at the S&P 500, you can see a huge push up on the day. And before I continue, I wanted to take a second to remind you guys to check out today's video sponsor, Vantage. Vantage Markets allows traders to trade CFDs on indices like the S&P 500, the NASDAQ, and even the Russell, as well as non-US indices as well. They have a welcome bonus that is available down below in the description. So if you'd like to check out Vantage, use that link to get more information. So again, the S&P 500 up a nice gain on the day. We saw a gain of about 1%, which is a lot, especially considering by, the standards before that, we had already been trending up before that. So it was a really strong day. And, if you're on the sidelines, the question is, what's the next possible setup? And in terms of a technical one, for me personally, I like the idea of a possible pullback on the S&P. An index, move like this is very possible to see a bit of a pullback after a big move like this. And if that does happen, I like the upside there for the S&P 500. Let's move on to the NASDAQ as well. So the NASDAQ saw an even greater gain in the recent days with all of this hype around inflation cooling, and it makes sense. A lot of technology names really stand to benefit a lot from inflation coming down, as that means, again, borrowing costs will come down if the Fed decides to cut rates. In order for the Fed to cut rates, they want to see inflation progress. They're starting to see it. That's kind of why the market is so excited. Now, in terms of the NASDAQ, similar to the S&P 500, for me personally, it's a little bit overextended, and I'd only really be interested to see, to potentially set up a trade for me if I can get a pullback. And I'm looking at like the 50% or maybe even a 61.8% retracement on this index for a possible setup to the long side, at least in my personal view. I like the upside to the NASDAQ. I think the story is still there overall, but I think it's also prudent to wait for some sort of a pullback before getting overly bullish on it. Next up, we'll talk about one of the indices that's not performing nearly as well, which is the Dow Jones. The Dow Jones actually saw a decline yesterday. The Fed meeting really did not excite a lot of the companies, the market for a lot of the companies within the Dow Jones. We can actually see it's down on the day today as well, making a push lower. The Dow Jones has just not participated nearly as much as the other two indices, the NASDAQ and the S&P that we just got done covering. And, you're wondering maybe why that that is, well, again, the Dow Jones is not nearly as tech heavy as the S&P 500 and the NASDAQ is. And technology stocks really cheered the idea of cooling inflation, but it does not necessarily, again, all indices are not created equal. That is the truth. You could see, again, the Dow Jones not nearly as close to its all-time highs. In fact, at this point, we are seeing the Dow Jones near 4% off its all-time highs. Meanwhile, the NASDAQ and S&P 500 pushing higher, it seems like, every day. Now, is this a possible pullback entry that could be a little bit more, appropriate? Well, maybe the Dow Jones is giving us a bit of a setup. If you're not so focused on technology companies, maybe these are pullbacks in the broader kind of upward trend that we've been in. The Dow Jones is a bit of a consolidation phase recently, but I wouldn't mind the potential of maybe picking up some positions on it if you do see a pullback into like the 38,200 level or the 37,800. I think that might be a point where I may look to start building some positions on some of the Dow companies or the Dow Jones itself. I also wanted to show off Vantage for a second and just let you know that this is really cool to me. If you're somebody who wants to trade stock CFDs outside of the US, of course, in the US, I can trade the stock market pretty easily, but I know for a lot of my viewers who are not in the US, you may want to consider checking out Vantage because you can actually trade individual equities. So check this out. If I go US equities ETF, look at all of the different ones that are available to you. You can trade things like PayPal or Shopify, Snowflake, Uber, Visa, Verizon, Wells Fargo. You can trade pretty much all of the major names that everyone knows and loves: Airbnb, Apple, Google, Nvidia, Microsoft. So thought that was kind of worth mentioning. You know, if I pull up like Tesla, for example, if you're somebody who wants to trade Tesla, you can actually pull their stock up and trade it directly within their platform. Again, if you'd like to check out Vantage, the link for them will be found down below in the description, and there is a welcome bonus available as well. So the question is also, what contributed to some of this inflationary cool down? Well, you could make an argument for some of the jobs data coming in a little bit light. Here is JOLTS job openings, which are trending down overall. You've also got the unemployment rate, which has been trending up recently. You can see just slightly. So there is some progress in the labor market, a slowdown that could be helping with the inflation study. The question then becomes, though, is that really good for stocks? Is the idea that inflation coming down is one thing, that's cheered, but is inflation coming down because the economy is starting to slow? That's maybe not such a positive thing for stock market earnings. And one area of the market that I think is maybe worth mentioning here is something I talk about frequently, which is the Russell. If we take a look at the Russell Small Cap Index, the US 2000 on Vantage's platform, you can see that the Russell has not done nearly as well as the NASDAQ and the S&P. And this is because these are companies that are a little bit more sensitive to interest rates. And what I mean by that is that if interest rates are higher, this borrowing cost is more expensive for small companies. And that is what comprises the US Small Cap 2000, is mostly smaller companies that are publicly traded. And so, one thing I would say is that what you probably need to see for the Russell to really see the same love would be strong jobs data and inflation cooling, which is a high order to fill, but that's the environment where you see a sweet spot in a growing economy plus cooling inflation. That would be the ideal scenario for the Russell, and we'll keep an eye on that and of course cover that in the future videos. If that is something that starts to materialize, I will probably be watching the Russell a lot myself. So stay tuned for that and make sure to hit the thumbs up button, subscribe if you're new to the channel. Thank you very much for watching, and we'll see you back next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.